please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Today, the financial city has been brought to its knees. Some of us have been able to come to work because we are too early for the protesters. They will probably rise by about 9 a.m. and we will have to see whether this financial city will be able to rise up on its knees despite such hoodlums. But, you know, this is certainly not acceptable way of registering protest, political or otherwise. Simply not acceptable. But anyway, at least I think we have some green on the Asian screen for us to cheer about. After 2 days of the new year, when the Indian markets didn't have much to cheer equities-wise, my own sense is today it's possible that the mid-caps will find their feet. Not much damage has been done to the big boys anyway. The Nifty is still 100 points off its all-time highs. But mid-caps have seen some damage, especially in some counters. It's possible that they'll find their feet. One, because we have seen FII buying for 2 days in a row. That always improves sentiment. There have been some very good green shoots for the economy in terms of the PMI and the commercial vehicle numbers. And more than anything else, crude is 50 paise cheaper. So at least that upward trajectory seems to have been arrested for now. So I'm keeping my fingers crossed, and I'm expecting that perhaps today we will see some respite to the selling. Morning, both of you.
Morning.
Why are you in red then?
Morning. No, the color really doesn't make a difference. I think the point that you made about the PMI growth numbers and the green shoots, that is the most positive, aspect that we've seen in the last few days. Even the commercial vehicle sales that we've seen, the kind of growth that these numbers have thrown up just indicates that maybe the worst could be over as far as the slowdown there is concerned. Anuj, morning. We've seen a volatile day yesterday. We ended with consolidation. Thankfully. But do you think that the next few days could see a similar trend where we chop around in a narrow range?
Morning, Sonia. First of all, I luckily got a BST bus this morning to come. And of course, then after that, a friend, Anil Singh, of course, picked me from highway. But anyway, look, the strong CV sales is the biggest cheer of late, both macro and micro. The problem is that market does not wait for data. The market factors in data, right? The near-term texture of this market has changed to sell-on rally. Let's not kid ourselves. And there's a good chance that there would be a rally early on in the morning because global cues are stronger. When we were doing closing bells, Sonia, yesterday, and when the market were closing, Europe was down 1 to 1.5%, and the market had factored that in. After that, Europe actually recovered quite a bit, and the US market, I think, made a fresh record. So in that sense, the global cues are good. But the problem is that any kind of gap up would be sort of ammunition for the bears right now, because the test for the market would be to sustain early gains. Look, this is a bull market, but bull markets go through corrections. And, you have to be prepared for corrections. And if every day the market keeps going up, then that's not a healthy bull market. You need to go through phases where the market tests your patience, where the market tests your skills, where the market tests your resolve. And this is the phase that the market is going through right now. And I would say that the mid-caps actually are vulnerable to a sharp correction. In fact, the high beta mid-caps, we've seen, normally when a correction in mid-cap starts on Monday and continues on Tuesday, anecdotally, it does not stop on a Wednesday. It goes on till Thursday and Friday. It completes, takes out the complete froth from the system. It takes out complete leverage from the system. And, it makes a lot of people throw in the towel before the market starts a fresh rally. And once again, the template might be repeated. There's a distribution phase in the market, right, which a lot of people, refer to as monkey selling. Where, a lot of these stocks will fall, but the good quality stocks will bounce back the first and they'll make new all-time highs. So the test here would be to move your money from these junk quality stocks to high quality stocks and just wait it out and see. If this is a bull market, it will make new highs, but it's going through a bit of a correction. Just a word on the F&O data, there was some index futures selling by FIIs. So there's a good chance that, there could be some selling again at higher level. This theory is out of the window if yesterday's high of 10,495, 10,500 is taken out. For me, that's sacrosanct. In fact, yesterday's low of 10,000, yesterday's low of 10,405 and high of 10,495. But my base case is that profile of stocks, the quality of stocks, you got to be in high quality stocks right now. some mid-caps are vulnerable to a bigger fall right now.
No, actually, I take your point, and for the past 10 days, I've been extremely uncomfortable with the mid-cap rally. I mean, there's no argument against the fact that there is a liquidity rush, but completely leveraged stocks which should never have been rising by 10-20% day after day. I mean, this just was a correction that had to come for the health of the market.
Okay, but there is one positive that's staring at us in the face, right? The very strong commercial vehicle data that we got yesterday. I mean, Tata Motors reporting 40,000 units of commercial vehicles that we have never seen before. And there was quite a bit of delivery-based buying in Tata Motors as well. Lata, you put together a lot of this data, not just the CV, but the core sector as well. Are we seeing some genuine signs of green shoots?
No, even I'm betting maximum on the CV numbers. But there are other macro data also which are very positive. First of all, the core sector came in at 6.8%. Now, you know, a year ago was demon month. But the demon month did not see a fall in core sector. You know, we saw construction activity fall. We saw cement contracting. But rest of the core sector data was okay. I think last year ago it was 3.2%. Over and above that, doing 6.8 was already indicating that some things are going good. For instance, steel had done extremely well. Cement, even after accounting for the base, was a very good number. But PMI actually took one's breath away. At 54.7, you know, for the last 2 years, even once we have not hit 54. And for the last 5 years, we have not hit 54.7. We've been averaging between 51 and 52 if you take the last 24 months. And therefore, 54.7 is a damn good number at an index level. And to come back to the CV sales, I mean, you spoke about 40,000. I just want to drive home the point that I took the average of the last 24 months of monthly Tata Motors CV sales, CV output, and that's like around 32,000.
Yes.
So it's a 25% jump. That's not to be ignored. Is that a one-off? Ashok Leyland. Again, I took the 24-month average, the last 24 months. So Demon, GST, everything is ironed out. If you took that or whatever, BS4, BS6, 24 months is quite an average. Again, it is about a 20% jump over the average of the previous 20 months. And likewise in Bajaj Auto, the three-wheeler sales. Yes. Three-wheeler is a commercial vehicle. And there again, as you had pointed out, you know, there was a quantum leap. It was not an incremental leap. And as a proxy of the, if you look at commercial vehicles as a proxy of the economy, then you can perhaps extrapolate. I am not trying to analyze whether this is already in the price and in what price. For me, all that matters is that the economy seems to be turning. These are three good data points. I'm not saying that there are not other, you know, difficult indicators. Exports have not picked up for the longest time. Tax collections are still lagging. I'm not saying that those are not there, but for the moment, I think these give me enough joy.
Yes, in fact, you know, I did get a chance to speak to the Tata Motors management as well. And they indicated to me that two products are picking up quite a bit. The 35-ton tippers and the 40-ton tractor trailers, which indicates that construction activity is picking up, because of which these products are, you know, seeing a faster amount of sales.
And it gels with the fact that cement numbers came in so good.
And you know, just a point once again, and that's why the market is at 10,500. It's not at 9,500. So
no, I'm certainly taking that a lot is priced in, but I'm not making that point.
Exactly.
I'm not getting into
this is going to keep the market in a good state. Nothing moves the market's needle more than the auto sales, and of course, if CV sales are really good, so you know things will look up. But you know, the last week of December, in particular, for the quality of stocks was so bad that you know once you know the correction in these stocks starts, it has a bit of a ripple effect. So you know you may go through 1 week of you know a lot of unwinding of leverage positions, which might be the best opportunity to pick up the good stocks, because you know at the end of the day these numbers will keep the market in good state. So it's not necessary that the market reacts to these numbers today. The market may well decide to, you know, have these numbers at the back of their mind, but right now there's a bit of a technical positioning of the market, which is impacting more than anything else.
So the health of the market
point, actually, because the PMI number came at 10 in the morning yesterday, or 10:30, and Tata Motors CV numbers were also known to the market. I'm just, you know, separate from the market, making a point that for me the economy has never shown such these are not green shoots, these are bushes.
Totally.
I mean, it's healthy growth.
Exactly.
Okay, well, you know what, let's, since we've started the day on a good note, let's take a look at what our wise experts have to say as we head into trade this morning. Citi's Robert Buckland lays out his global strategy for the year. He says, having had a good year in 2016, contrarian strategies underperformed in 2017 when they were too defensive. They will be defensive again in 2018. Contrarians are now implicitly calling the end of this economic and market cycle. Buckland calls this move premature. He adds that they would resist the temptation to chase any New Year rotation. Citi retains a cyclical tilt in their global sector strategy.
I would think that that would hold for India as well. Cyclicals more than the abandoned ones of 2017, like maybe pharma or something. Well, money market views coming from Pramit Brahmabat of Veracity. He expects the rupee to continue its northward journey on the back of sudden FII inflow. He sees a trading range of 63.30 to 63.60 against the dollar. Now, this should make us pause. 63, yesterday the close of 63.47 was already a 2.5-year high. The last time we had seen this was July 15th, 2015.
Yeah.
That worries me. Because import substitution can start pretty quickly if the rupee keeps rising, and you will see it in steel. You know, in spite of very good global steel prices, if the rupee continues to appreciate in the way it is, it's not good news for stock markets. Of all the green shoots, this is one number that we should be really worried about. 63.30 on the rupee, I mean,
Yeah.
what are we talking about?
Even bond yields, right? I mean, that's concerning a lot of people, as well as PSU banks, etc. Dhaval Dalal of Edelweiss AMC says 2018 has started on a cautious note for the bond market. All eyes on the market response to the new 10-year government bond cutoff. He says that a lower cutoff yield as well as price action after the auction may help improve sentiment. He adds that the outcome of the auction for FPI limits in corporate bonds will give a glimpse of their appetite after the recent rise in corporate bond yields. He forecasts a near-term range of 7.3 to 7.4 on the 10-year yield.
There's a bit of a confusion over here because now the new 10-year will come. And the new 10-year, since not many people will get it, will have a very attractive yield. You know, it will go towards 7.2 or 7.25. So you won't know exactly what is the 10-year yield. And to add to that, they are also auctioning the amount that FIIs can buy. So, you know, there will be multiple indicators for the market.
Okay, we'll watch out for all of these. But, you know, some things don't change. US markets keep making new highs. So the first day of new calendar, a fresh record high. Over to Ronit then for the world view.
As you said, Anuj, the new year starts with a bang for the US markets. All three US indices at record highs, with the Nasdaq above 7,000 for the first time ever. Moving on to individual stocks, the Disney stock was among the top gainers as Macquarie upgraded the stock to an outperform, saying that post the Fox acquisition, the company will benefit from distribution leverage going ahead. Moving on to another individual stock, Target. That stock was up most close to around 2% as an analyst on Wall Street predicted that Amazon may acquire Target going ahead. Moving on to European markets not much happening. They closed in the red, all three down close to 0.5%. And moving on to individual sectors, the auto sector is among the top losers. As you know, data came out saying that car registration data is reduced for the December month. Moving on to an individual stock, Publicis, that stock closed 2% lower as Macquarie downgraded the stock to neutral going ahead. Now moving on to the Asian markets are opened all in the green with the Hang Seng and Shanghai as well as the Hang Seng at a 10-year high. SGX Nifty also indicates a green start to today.
Okay, thank you very much for that, Ronit. Green all over, and as Anuj was pointing out, now it's becoming a habit for the US markets to give you a record high every third day. But here's someone who's cautioning you against it. JP Morgan's David Kelly says he expects only a 3% growth for the US market in 2018. Kelly says that it's reasonable to expect the stock market to have a correction after 2017's record run. Listen.
It's reasonable to expect a correction. The average correction in any given year is about 14%, and we've been very far from that in the last few years. But I think it'll get more interesting as the year goes on. I think we start with a lot of momentum. I think about 3% growth. I think we'll do 3% growth for the year. Productivity, that really is the key, because we're out of workers, and we think this will push the unemployment rate down to its lowest level since 1969, 3.4% by the end of the year. But if we get there, that's really as low as it's going to go. So growth will have to taper down to about 2% next year. We can get 3% growth, but it is a one-hit wonder. 1 year of 3% and 2s for as far as the eye can see after that. And the whole question is, how does the market adjust to that, to the reality of slowing growth in the United States from 2019 on?
Still watching Bazaar Morning Call on CNBC-TV18. Things are looking good across the Asian markets, I must say. Yesterday was a fabulous run for markets like Hong Kong. Day 2 is looking even better, so about a 150-point jump over there. The SGX Nifty 2 is up about 0.2%. But global headlines...
Wide for me, 10,100 on the downside and 550, 600 on the upside, and we have been spending time in that range for weeks altogether. So that range will need a lot of effort and time before it actually breaks. Much more interesting is the fact that we are unable to cross the earlier highs and are failing repeatedly. So all the bullishness of 2017 is now confronted by this failure. I explained yesterday that I am now no longer bullish, at least not now. The trade is in the Nifty is to be either on the short side or much better to step aside and not take a trade. If you are short, your stops are 10,600 in the cash Nifty, which is wide, because we have to let the market play itself out whether it is willing to go higher or not. But the bias is no longer bullish. So the Nifty Bank and the Nifty itself are either short sells with wide stops, and I've given you the stop, or a complete avoid on the long side. Intraday trades on the long side may come, but let me tell you, throughout last year we were upbeat. So everything on a dip was a buy. That view seems to be changing, so intraday trades need to be taken with a lot of caution if they are on the long side.
Okay. Mitesh, good morning. How are you trading the index, Nifty and Bank Nifty?
Good morning, Anuj. We haven't been trading the Nifty. I still believe that it's more of a sideways kind of an activity with choppiness, given the fact that most indicators are now turning flat. So next few days could be broadly a range of 10,350 to about 10,550. So try to buy it below 10,400 if you get it. Otherwise, for me, it's just an ignore. The Bank Nifty is interesting. I think 25,200 is now emerging as a very critical level for me. I think if it starts breaking below that, we could have a strong short trade open up. But till then, it's a 350 point range between 25,200 to about 25,550.
Okay. Well, gentlemen, with that, let's move over to some stock-wise trading strategies. Ashwini, what would you trade?
See, Manpasand Beverage, that's a buy with a stop of 457, target of 475. J Corp is a buy with a stop of 199, target of 214. Housing Finance is breaking down again, so PNB Housing is a sell with a stop of 1330, target of 1250. And BOI is a sell with a stop of 171, target of 159. And Union Bank is a sell with a stop of 145, target of 135.
Okay, Ashwini, interesting. PSU banks on the selling list. The Bank Nifty has been underperforming. So, is there a clearer trade on that?
See, naturally, PSU banks are showing much greater weakness within the Bank Nifty. So, on any rallies on Bank Nifty, this is the space that you get short on first.
Okay, Sudarshan, what about you? What would be on your list this morning? And do you have any of the commercial vehicle makers on the list, considering that the data is so positive there?
Yes, I should have, but I don't. My overall view on the market has turned a little downbeat. So while commercial vehicle makers have done well yesterday, I'm no longer interested in buying most of them or anything blue chip now. There are some stray mid-cap stocks that are worth buying into for short-term trades. That starts with Hexaware, where Hexaware, NIT Tech, mid-cap IT continues to go up. I don't know how Nasdaq's big rally yesterday will affect them positively or not, but at least on our own charts, they are a buy. So Hexaware is a buy. NTPC independently is a buy, irrespective of the choppiness in the Nifty, because power stocks and NTPC specifically are giving signs of life now. Then we have Bata India, my favorite. A small decline is coming to an end there, and a renewed rally, and some of these stocks will not be affected by whatever the broad market does. So 3 buying ideas: NTPC, Hexaware and Bata India, and 2 easy short sells. LIC Housing, same reasons. They're all breaking down and significantly lower levels may be coming. And my favorite sector, Can Bank today. Every day I get a PSU bank, and Lata, you could close your eyes and sell any except for State Bank. Okay. So 2 short sells, 3 buys, and a confusing scenario.
Okay. Well put, Sudarshan. Okay, Mitesh?
I think Lata, very similar approach. I have 3 buys and 2 sells as well. HCL Tech and the IT stocks have been in some kind of an up move. So HCL Tech is what seems like joining the rally now. That's a buy with a stop at 876. Look for targets close to about 922. Marico has slowly started to give signals of an up move. The indicators are expanding on the upside. So buy with a stop at 319. Look for 338 as the first target. And Tata Motors, it's been a buy for last few days, but even at current levels, comfortable to buy with the breakout candlestick which we saw yesterday. So buy with a stop at 432 for targets of 456. And 2 sell calls. Aurobindo Pharma, the intraday charts and the candle pattern is negative. So that's a sell with a stop at 685 for targets of 645. And UBL is something which has broken an important support level, might face more supply. So sell with a stop at 1050. Look for declines to about 995.
Okay. Ashwini, just a couple of more questions. A, how to trade ADAG stocks now? And B, your thoughts on Ashok Leyland?
See, ADAG should shed some more weight. So chances are, if you get any sort of rallies there, you should go short on them. Maybe they could rally further, after some time. But for the moment, they are short sells. Ashok Leyland, yes, numbers, etc. have been good, but the market mood isn't that good. So you may get 130, 135, but it's not like Ashok Leyland will suddenly go up 25% and the rest of the market will sulk. So while it could outperform, it may not fall a whole lot, but tough to see it really move up strongly.
Okay.